Indian technology presents a huge opportunity. Companies around the world are watching the nation's 12,000 energetic new startups and getting in on the ground floor. India is also poised to become a SaaS hub. But in many ways, U.S. companies haven't capitalized on this opportunity to its full potential. Why not? What are the factors? Factor 1. Perception. India gets compared to China because of its size. India's population is exploding. Within 10 years, India will surpass China as the most populated country in the world, with over 1.6 billion people and a robust domestic market. But emerging Indian SaaS companies show Indian tech companies perform in the global market like Israel. Israel has a strong focus on enterprise tech and supplies the world. India's emerging SaaS hub will become $10 billion annually by 2025. This equates to 8% of global SaaS. Media comparisons to Israel or China are limiting in our view. With the ability to serve both domestic and international markets, India is more like, well, the US. And if we view it through that lens, we realize we have more in common and share the same goals. India's breadth and depth in software and services is extensive. Couple this with a large workforce trained at U.S. company development centers in India. Not to mention, India is home to more engineers than the United States or China. India is creating products and services for business needs globally that will complement or replace yours. Factor 2. Memory. Memory of a stodgy and bureaucratic India holds U.S. companies back from trying beyond the labor arbitrage. Companies that engaged in previous opportunities were buried in red tape and got their hands burned. Today, India has turned the red tape into the red carpet. Countries around the world are engaging in this new business environment. It's time for the U.S. to take another look. These positive trends are getting additional fuel from a pro-business Indian government. Policy focus is on adopting best practices and laying out the red carpet. There's transparency now where previously there was no clarity, a key change being felt in the past year alone. China and Japan don't carry this historical baggage and are looking at the opportunity in front of them. During the dot-com boom of the 1990s, entrepreneurs, financial investors, and government officials across Silicon Valley and India began working together to construct a bridge between India and overseas investors. As we've seen, the bridge is what's fueling the startup revolution in India today, a revolution with over 12,000 startups nationwide. Moreover, Indian SaaS companies are able to battle test their products in a vast emerging India and get extremely competitive globally. Who is engaged in India's future today? Chinese, Japanese, and South African companies have leapfrogged and created partnerships, joint ventures, and acquisitions at a rate faster than 4 times. The United States is not engaged as it once was, and will miss out. Until now, the U.S. has viewed India as a great talent pool full of engineers, executives, and call centers that are very effective within U.S. companies. But India's true potential begins by seeing how today's Indian technology startups are catering to the global market. If the U.S. wants to seize on the current opportunity, we need to reimagine our relationship with India. To recap, the comparisons to Israel and China are limiting, when in fact India's opportunity resembles more closely the U.S. Times have changed over the last 20 years, and the red tape has become a red carpet. India's talent is one part of the opportunity. The other opportunity is Indian organizations, like the SaaS companies. It's time to engage or get left behind. Other countries have engaged and are reaping huge rewards. Let's continue the growth opportunity which can benefit both sides tremendously. Where does India fit in with your strategy?